We need to talk. For some reason, the price of Ohm pumped big time on Bitget over the last day or so. It pumped all the way up here to 90 cents, only to retrace and give it all away. Now, it's not just the price pumping on Bitget, and literally nowhere else was it doing that. But the main problem I'm seeing is a lot of this stuff. I'm seeing a lot of people saying, oh man, this is such an amazing thing that's happening for Ohm. It's going to go so much higher. It's going to be Ohm to $10, all this stuff. We're seeing, oh, there's so much excitement. Why is it that people are so obsessed with trying to catch the bottom of a falling chart like Ohm when there are no clear signs of a bottom yet? If this is the bottom for Ohm, and it could be mainly because the price fell to this price-based low here on Binance of 37 cents. It actually cracked it right here at 36.90. If this is the bottom, that would be amazing. That'd be great. But why are people so obsessed, specifically in crypto, with trying to find and identify the absolute bottom for everything, where there's so many other equally risky and dumb tokens and coins out there that are actually doing a lot better? In this video, I want to take a step back. We're going to be looking at charts, but I want to take more of a philosophical look as to why we as crypto traders are obsessed with trying to get the bottom or the top, and why we are obsessed with catching falling knives. We have more holes in our hands than we have slots in here. Like, it's just like basically Edward Scissorhands, like clapping. Like that's crypto right now. There is a time that Ohm will most likely start to rebound. And I'll talk about what that should look like when it happens. But manipulation, that's nothing new to crypto. Are you kidding me? And there are so many other charts that we could be trading in the meantime instead of trying to hope and wish that we actually caught the bottom of Ohm, when in reality it could still fall a lot farther. I'm going to be talking about that and a lot more in today's video here on the Coin Bureau Trading YouTube channel. My name is Aaron Dishner from The Better Traders. Subscribe to this channel. Join me and Dan as we take on trading with the lens of me from The Better Traders, Dan from Coin Bureau, looking at tons of charts, tons of analysis, all that good stuff. I want to go back to X because we're seeing a lot of stuff over here. Even me, right over here. Look at that. That's wild. February 19th, 2024. That's insane. We have a lot of these amazing charts and a lot of people saying, Ohm is going to be going up so much higher. I don't care if I'm going to be buying the bottom or whatever. I'm so happy to buy the bottom. No. Because people that saw this dead cat bounce, and this is what when this happened, I told people in the Better Traders Club, and I'm pretty sure online, that, well, the next logical spot for Ohm to hit is right here at about 88 cents. As soon as it hit that, it just got smacked down, and then it's slowly dragging lower from that price of 88 cents from its previous all-time high, I believe, with listing price. It's down 55%. And the reality is that things look really bad with this chart. If we just look at daily RSI alone, there is literally no strength. This is like when Samson's hair got cut by Delilah. Like, this is awful. There's literally nothing here that's showing any sign of bullish strength building whatsoever. And it's not just RSI. Look at daily volume. Daily volume has fallen way down. There's a lot of initial volume because of this scam dump that happened down, 83% in a day. Volume is not growing. Price continues to fall day after day after day. On balance, volume is very bearish. Now, the main things we have to understand is that when we see manipulative pumps like this on Bitget, it's going to happen. Like, this is crypto. It's normal. There will be decouplings because every exchange has its own order books. And usually what happens is the perpetuals on those order books are derived from their spot contract, or it's like it says here, a mixed contract. So what's weird is over here, the perpetuals contract on Bitget here for the futures chart didn't have a pump, but it's obvious that the spot price did. Now, I'll tell you what this pump is. And I see this happen a lot, mainly with low caps, which is concerning because Ohm was doing really well. Obviously, we all know is much higher than this. What this typically means is that this is a test pump. I'm not saying this to get anyone's hopes up if you're holding Ohm, but typically what we see is the market will try to find weaknesses in a coin that's falling lower. And what will typically happen is on a low volume exchange, there are going to be test pumps to see, okay, how much money do we need to inject into the price on this exchange, this ticker on this one exchange to pump the price up. And that's exactly what we saw happen for Ohm on Bitget. What typically happens next is the market will forget about it, probably for, I'm going to guess like 15 to 30 days. Then all of a sudden out of nowhere, there'll be a huge pump. Now, I'm not saying this to say, oh, okay, you should definitely buy this dip. I'm not saying that whatsoever. But I am saying that that's a test pump. And I've seen those happen so many times, especially on low volume exchanges like KuCoin, Hit BTC, Cryptopia. Like, I am aging myself because a lot of you don't even know what those exchanges are. That's fine. And one of them is even defunct. So the main thing I'm trying to share with you is that it's not weird to see prices pump like this on another exchange for a token that has literally no demand. None at all. It does tell us that there should be a follow-up pump soon, maybe, but it's still extremely risky. The argument that I want to make for this video is, why are people obsessed with buying the bottom on a coin that has had such a terrible, terrible fall? Literally down 99%, I'm going to say, up here from $6 down here, 93%. Pardon me. Why are we obsessed with trying to find the bottom on this? Well, let's take this from, let's just play devil's advocate, I guess we could say. So Ohm was an extremely valued coin. We saw it rise. And actually, this is not the low. That was the previous all-time high, is that one back over here from this measurement. So when we're looking at this, the low is actually at less than a cent. So it's still up 2,000% from its all-time low. What typically happens is when there is a mild sell-off, not down 80% in a day sell-off, charts that are strong like this, and this chart has seen sell-offs down 40% that last a couple weeks, but we inevitably see the price rise and go higher and higher. That's normal. But when there's a massive break in a chart like this, people are looking at this thinking like, oh man, I want to catch this bottom just like Luna. The reality is that Terra Luna is not this cheap. Terra Luna was worth, gotta keep going, up here, like the $100 range, actually right up about here, before it collapsed in 2022. And now it's down, actually made a new low. It's, I don't even know what that price is. It's ridiculous. But people still want to buy and hold Terra Luna Classic. Why? Why are we obsessed with this? Well, it all comes down to this illusion of X's. People want to get the Pico bottom so that way they can pat themselves on the back if this coin happens to rally back up to get a 10x, 50x, 100x. Seen it a million times. This space is very much plagued with this idea that, well, if I just get 100x here, if I just put everything into Ohm right here and it goes right back up, something magical happens, and I'm going to make a 15x. That's true, that if that happens. But this is such a huge gamble that I'm looking very critically at this chart going, why would you want to do that? I mean, RSI agrees with me, weak, volume agrees with me, no demand, no excitement. There's manipulation happening on other exchanges, which is not a sign of positivity for this chart. It's a sign of manipulation. Why do we do that when there are other charts that are actually doing much better? Now, I am not in any way saying, oh yeah, these are the charts to buy and hold, because to be honest, anything could face the same kind of whiplash that Ohm has seen. So we need to understand that just because I have these 4 coins here and I have a variety of coins for different reasons does not mean that these are immune from drawdown. The point being that Ohm has suffered massive drawdown. It looks beat up. Could it finally start moving up 100% back up to $1 or start working its way up to $5? I really don't think so. Anything could happen. But it's more unlikely for it to shoot up to $5, even for the top of, or rather, as this market starts to heat up and Bitcoin goes beyond 100K and goes higher, I still have a hard time seeing Ohm retrace all the way back up. It's possible, but it's very unlikely. Now, the reason why I have these guys here is to prove a point when it comes to buying the bottom or following a trend. Looking for the Pico entry to get the most self-glorifying 10x, 50x, 100x entry versus charts that are just grinding up higher slowly. And it doesn't have to be these really amazing top-tier coins. FARTCOIN is here. The meme coin does absolutely nothing, yet this one has been in a strong uptrend for a while. I think there's a lot to say when it comes to our mentality toward crypto. I have more that I want to share. And I'm going to go into why I think those 4 charts are much better picks compared to Ohm. But before I go there, we're talking about trading. If you guys don't have access to an amazing non-KYC exchange like CoinCatch, which I'm using a lot right now, you can get a sign-up bonus of $150 and trade to earn up to $4,000 in bonuses by clicking on the link that's here. It'll take you to the CoinCatch website, put in your details, make sure the referral code stays here. So when you use this link, we actually get a kickback at Coin Bureau, and I get a kickback of that as well, which is nice. There's no pressure to do so, but it's a great way to show support other than liking the video and leaving comments, which I also appreciate. But you do get special bonuses by using this link. There are also more deals that are available on the Coin Bureau website right here. If you click on coinbureau.com/deals, it takes you to the Coin Bureau website, to the deals tab. And here you can join the Coin Bureau Club, which is a private Discord server with tons of information shared by Dan, Guy, and Nick, and others. There's a lot of information. There's great picks in there. There's also up-to-date information on what's happening in the crypto markets, which is incredible. There are other exchanges, other tools to sign up, and there's also a 10% off discount for everyone at Coin Bureau to save 10% on our course, The Better Traders, 50 Minutes to Financial Freedom. So this course comes with one-on-one coaching. You don't have to pay and for this access to this course every year. You just get access to it. That's it. That's done. That's the way I do things. You get access to the TBO. You get access to a course guide. You get access to the Better Traders Journal, which is right there, the golden book, if you ever wonder what that is, which actually is a nice transition back to here. While we could be able to catch the bottom on Ohm, maybe, the reality is that we should be very intentional and aggressive about protecting our portfolio at all costs. This is one of the rules, and I don't know which rule it is, but this is a great rule. Protect your portfolio at all costs. Some people could interpret this as always using a stop loss. Some people could interpret it as spreading your risk so that we are not overly invested in just one coin. Some people might think, well, this is all about diversification, not just crypto, maybe some precious metals, stocks, bonds, things like that. You do you, boo-boo. For me, protect your portfolio at all costs means I am less inclined to trade a chart like Ohm, personally speaking. Could this be the bottom? Sure. And you know what? If it is, and the price of Ohm goes up, 150% from here, good job, everybody. I don't really care because for me, this has been burned into my mind after being in crypto since December 2017, because I've seen many charts that look very similar actually to Ohm, thinking that, I bought the Pico bottom. This is amazing. It's going to be pumping up here. I'm going to get 10x, 15x, 50x on this trade. And it just keeps dumping and falling. And I think, well, I'll just sell a little bit and then buy more as it falls lower. And buy more as it falls lower. And as it falls lower. And basically you just destroy your portfolio because you're not approaching trading with a defensive attitude. We should not be reactive as traders. We should be doing as much as we possibly can to predict what the market's going to do and therefore plan in advance what our actions will be. If scenario A pans out, this is what I'll do. If scenario B pans out, this is what I'll do. But too many people go into trading thinking, well, I'm just going to click the green button, put 100x to this, max slider, 150x. Why not? Sure. What's the difference? Put everything on the line and just treat it like a big roulette table. It's not going to go well. But if you can learn how to protect your portfolio at all costs by choosing carefully which coins to invest in or trade, and understanding that trading means taking profits. There's nothing wrong with breaking even and holding for a long time, but trading means taking profits. You will do much better than most. You may not snag a 20 or 50x this cycle, but if you walk away with more than you put into it, good job. You're doing better than most people. I'm serious. Looking here at the chart for CRV, for Curve Finance or Curve Fi. This one printed a TBO open long. And I also want to say I'm using the TBO here so that way we're looking at confirmation of an uptrend. You don't have to have the TBO. We could even just look at the price. But there are clear signs when a chart begins to show that it is bottomed out. Now, this is a free indicator right here, and it's a volume-based indicator. And this is really helpful because there's a 30 SMA applied to it. So even without the TBO, we can clearly see prices going lower, and then all of a sudden we have this inflection point right here. It's easy to see in hindsight. It's hard to see when this starts happening. But one of the key things that will start happening is that we will start to see volume grow, and it will support the uptrend. While the moving average, the yellow line, is moving up, we should see that complemented by the price moving up as well. This gives me confidence to buy the dip. The TBO helps me and gives me confidence knowing that I have a confirmed uptrend here with the TBO open long. So that's the difference about using the TBO. And TBO open longs will always be late. I don't have a problem with that because even buying after the TBO open long, we can still see that there are days going up 10% and it gives it away 5%. Some of them actually go down a lot more. But what this symbol means is that we have a confirmed uptrend, which means even if you don't want to buy and hold, but we could be trading this range, knowing that we should be continuing to move up higher. And what's happened every single time is we see the price chop sideways, and eventually we get a nice pop. Chop sideways, get a pop. Chop sideways, should get a pop. Core, similar story. We have a confirmed open long back over here. If we look at volume, we can also see that volume told us the bottom was way back over here. So we can see the price continuing to go lower and lower until finally we get a huge injection of volume. See that right there? It doesn't look that big, honestly, in hindsight compared to all this stuff. But looking at all this volume and then finally right here in April, on the 30th of March, right here. This is where the bottom was marked. Now the TBO is late, which is always going to be late because it's waiting for bullish confirmation. It's late by 17 days. So we could even use volume to confirm the uptrend, which is great. There's nothing wrong with that. But even so, if we were to use the TBO, get bullish confirmation, even if we're having to wait and things go against us, the overall uptrend is up. The overall trend is up. Even falling back to the TBO fast line, it's up. I would much rather trade something that is a confirmed bullish uptrend rather than crossing my fingers and hoping for the best. It doesn't make sense. I would much rather be trading something that goes up slowly than putting a lot of my portfolio in a very risky position and crossing my fingers. And it's not just Curve or Core, which are two tokens that are probably in the top 50 market cap. Actually, they're definitely in the top 50. But FARTCOIN, so this is a much more speculative coin that is admittedly silly. It's a meme coin. It's ridiculous. But we can also see back here on the 5th of April, we have a confirmed TBO open long. Even after this, the price went against us by 17% because this chart is so crazy. But since that signal is printed, the chart's up 128%. Now, there's no way to know it's going to go up that much. And admittedly, right now, volume is falling off of a cliff. This looks bad. But at the initial stage, Again, using volume to help infer if there is a bottom, we can start to see when volume starts to come into this chart right here and starts to big time outperform the moving average. Right here is where things get exciting. And again, the TBO is late by many days. It's late by, funny enough, 17 bars yet again. So I would much rather have confirmation on the daily time frame with the TBO open long than cross my fingers and hope that this is going to go up and not fall lower, because it could. Flare. So now we're getting really down the list. Flare is relatively unknown. It is on OKX. It is on other exchanges. I'm not sharing these coins, by the way, because I have exposure to any of them. I don't have any of these coins right here, but I'm just showing you proof of concept. Curve, Core, these are fairly reputable coins that have a good amount of volume. FARTCOIN, meme coin, has no real utility or purpose, has volume. Flare, this one's pretty weak. $1.5 million on a 30 SMA. So we're seeing volume here that's under $1 million a day. But we can also see, without the help of the TBO, there's a big downtrend, uptrend. We can see support right here. Price falls, hits support, and it actually pumps. And this big pump burst of volume changes the trajectory of Flare. I talked about this actually a while ago. I'm honestly impressed that it's moved up even more. And what's better is that we have a TBO close short, letting us know that the bearish trend should be ending soon. There's our return to the fast line, which is our entry. From there, it's up 28%. Here's our open long. Even after the open long printed, and again, late. Was it 17 days? Is it? No, 15 days. But interesting. It's about the same time frame. We're looking at this going, okay, well, yes, some days are great. And then it returns back down. Some days are okay, and down. But we see it continuing to push up higher. A lot of people think that crypto or investing in crypto, trading in crypto is the same thing. It's not. You can actually make way more money, as this channel states, by trading. That's the whole purpose. That's why I talk about these concepts with you. There's nothing wrong with finding mid to long-term investments. But if you're just jumping into something because it looks crazy oversold and there's no way it could fall any farther, be careful. That's a really weak investment thesis. Just because something was extremely desirable and has fallen 93% does not all of a sudden make it desirable. Could Ohm turn around? Yeah. But I'll tell you right now, the fact of the matter is that it did basically pierce just ever so slightly this support level. If Ohm falls below 37 cents, it's going to be a rough and rocky road, and not the kind that's great with almonds and marshmallows in it. You know what I'm talking about? It could fall a lot lower. It is not at the all-time low. Down here, as TBO support tells us, at about 0.0174. It could still fall another 95% from here. It just depends. We need to be careful and also realistic when it comes to trading and investing in crypto. There's a good reason why I focus so much of my time, effort, and energy charting Bitcoin first, not 11th, first, because Bitcoin leads the charge. It's been around the longest. It continues to be the most reliable. And even though it will have bear market periods where we could see drawdown of 80 to 90%, Bitcoin just keeps coming back, keeps making new all-time highs. So I have a difficult time looking at Ohm with a serious eye going, oh yeah, I definitely want to buy this one. If you want to buy it, go ahead. There's literally no judgment on my side. But I would strongly encourage you to write down that trading rule. I will protect my portfolio at all costs. If this is something that you want to commit to doing, write it down, put a sticky note right on your computer or wherever you're trading, on your desk, write it down. This is what it's about. Self-preservation is one of the most often overlooked elements to being a successful trader, period. If you don't have an account, you got nothing to trade with. If you like this idea, I will protect my portfolio at all costs. Write it, leave it. I want to see all the comments for this video. I will protect my portfolio at all costs. This even means with a chart like Ohm that has had an incredible incredible rally from literally below 2 cents all the way up here to $8, 44,467%. Yet if you're just buying and holding this and you're never ever taking profits, shame on you. Gotta take some profits. And if you've taken profit and you want to let the rest ride, cool. But you have to understand the importance of protecting your portfolio at all costs. I don't want to get too preachy in the video, but I just want to remind you that what happened to Ohm could literally happen to any token, except for Bitcoin. Pretty sure that's not going to happen to Bitcoin. But we will see drawdown for the next bear market. That's something I can definitely say without any hesitation. We will have a bear market for BTC. So I want to know, what do you think? Is it worth trying to find falling knives and catching them and trying to get the ultimate peak or bottom? Have you fallen prey to this investment strategy of trying to find the most oversold coins, thinking that you bought the bottom, where in reality, it actually keeps falling lower? It's okay to be honest. It's also okay to share your actual, the results that you've had buying the bottom. Sometimes we get lucky, and that's okay. But if we're not entering every single trade with this rule, and that's where this, again, the Better Traders Journal comes into play, because this is one of our 5 trading rules. I'll protect my portfolio at all costs. If you don't have that in mind, you might do well on 1 or 2 trades, but longevity will not be your friend. So let me know what you think about this video. It's a little bit different. I know it's not as like, yay, so exciting, but I'm curious to know what you think. Leave a comment down below, and until the next time, you know what to do. Stay awesome and stay in the green. Peace.